Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. You can see yesterday was also significant action to the upside. So we talked about this, and mostly if you take a look once again on the weekly chart, you could see here the XLP target that we have discussed mostly has been completed on the monthly chart. So for now, market stands at very significant extension. So obviously it needs some time to show the reaction. In general, the overall upward performance stands due to the nervousness on the markets, because degree of uncertainty was rising. Yesterday it was also a very interesting statement from the Jerome Powell. Well, I mentioned it already in the Euro video today. So he said in towards that supposedly inflationary effect of the tariffs will be greater than initially the Fed thought. And it potentially in some moment could make the Fed start thinking not about the cutting rate, but about the hiking the rate. So, of course, the gold market is rising not because of this particular speech, but the rising of inflation expectations could mean that the real rate is becoming negative faster, which is maybe supportive for the gold. But, of course, the upward action mostly stands as a reaction on overall nervousness among the government authorities, among the Fed, some respected analysis speech, some big companies, so Ray Dalio, Druckenmiller, many other famous bankers also talked about the difficult situation. So while Donald Trump keeps speaking that everything is great, so we're on the way to the Commonwealth. So this, of course, doesn't bring some certainty and confidence to the market, which make the gold market to keep going higher. In the current moment, based on the technical rules, the few that we could do. So actual market stands once again around the top, which also doesn't suggest the taking some long position right there. So probably it makes sense to wait for the bounce. And in the current situation, we could consider only some intraday steps. So, for example, on the fall time frame chart, we have the reversal candle on top. Here, potentially, we do not have yet the grabber, but potentially it might be formed, and that's the pattern that we need to keep an eye on. So currently, you can see that this candle would not have it, but next 4 hours, something could be formed here. So that's one of the moments that you need to keep an eye on, whether it will be formed or not. If it will be formed, it means that the theoretical market could try to at least retest the previous top. So this is very short-term trade just for a few hours, but it might be interesting, especially if the appearing of the grabber will be combined with the picture on the 30-minute chart and hourly chart. What I'm speaking about. So we have a great thrust up. By the first view, we have the kind of the double repo shape. But this, of course, not the double repo. On Friday, I already explained the similar situation on the euro currency. And we have to come to the conclusion that euro instead should keep going higher, which is actually has happened. Here's absolutely the same story. This is not the double repo because it doesn't carry the major feature of the double repo, the failure of the bulls to break through the top. This is just simple ABC retracement, although you could see here the proper crossing of the moving average. That is totally corresponds to the conditions of the double repo pattern. But the primary point in any pattern by the Jordan Apple is the nature of the pattern, the market mechanics of the pattern. And for the double repo, this is the capitulation of the bulls with the direct double repo, and that which we do not have it. We do not have here. So ABCD pattern that is forming shows that the OP stands around 33 area. So in general, 33 or 7, 33 or 5 on average, that will be the support. And potentially, this might be a good point to consider momentum trade. So we have great thrust, first ABC retracement to the 30% support. If you plot here additional Fibonacci levels, for example, from this reaction point to this top, you also will get here the 618 support in the same area, which will give you the confluence. The confluence support in agreement with the current pace of action. That will be great and might trigger the pullback at least for $20 to $25 to the upside, maybe even to challenge top once again. So that's the first area to keep an eye on. If it will be combined, as I said, with the pairing of the grubbers on the 4 time frame chart, all the better. So in this case, you even could rise the target above the top. So that was what we have. Unfortunately, in the current situation, when the market's calling around the top and near the overbought, we do not have anything else on the higher time frames because market just has completed major XOP on the monthly chart. So market needs some time. But on the intraday charts with these minus setups, with the minor targets around $15, $20, so it is possible. So that's probably the only option that we have currently and what we actually intend to do in today and tomorrow sessions.